I want to introduce you to Mr. Larry Drummond, CEO of IPMI. Larry, and then Larry will introduce all the other speakers. But I want to express one consideration. I was able to attend this symposium that you have heard in these past days here in Vicenza, the Basilica Palladiana, which is one of the most beautiful architecture and piece of architectural art. And I was amazed to listen to all these technical things and how science, technology has advanced in order to give to the industry new, let's say, material or primary material, not raw, but in this case, primary material in order, alloys and so on, in order to give to the industry the opportunity to produce better for the benefit at the end of the supply chain of our consumers. Our relation as World Jewelry Confederation and IPMI has had, since the very beginning, a number of goals, and the consumer protection is still and must be and remain the most important element of what we are going to do. I pass on to Mr. Larry Drummond, CEO of IPMI. Larry, the floor is yours. Thank you very much. Thank you.
Well, welcome everyone. I first want to start out by thanking Gaetano and Stephen and your staff for all the work that you've done to make this event possible, so thank you very much. Also want to thank our sponsors, our gold sponsor, Piggott, our silver sponsors, IKOI, Italpreziosi, and the European chapter of the IPMI. Also, thanks to all our volunteer speakers and our panelists. I think we have a good afternoon planned for you, as well as an enjoyable evening after that. As you know, we got started a little bit late, so the slides are going to be available to everyone after the fact. So my role up here today, and it's repetitive for some of you in the audience, but is to just tell you a little bit about IPMI, and again, you'll be able to review the slides, but I think the IPMI has a lot to offer in terms of education, in terms of networking with various aspects, actually almost all aspects of the precious metal supply chain. So with that, I am going to hopefully start a presentation. Then Matthew is going to follow me. Hold on. It's not advancing. Oh, is that the first one? Okay, so we have over 600 members worldwide. In 2026, we're celebrating our 50th anniversary, and our tagline really tells you all about the IPMI, connecting you to the world of precious metals. That's really what it's about. So we have a global platform for the precious metal community. We have a variety of events that we hold throughout the year. The three biggest events that we have are our annual conference in June with over 500 attendees, and it's sort of a who's who in the precious metal world. Our European chapter, which should be of interest to a lot of people here in the audience, has a major event every November. This year it's in Budapest, and again, that's a two and a half day event with about close to 250 people in the precious metal community that attend. Again, so there's a lot of education and networking opportunities. And then we have our winter meeting, which is in Florida, which is really a technical meeting. And as Gaetano talked about the technical type of things that you saw at this recent show here in Italy, you know, a lot of our member companies are the kind of companies that have that kind of scientific knowledge and that know-how on dealing with precious metals. So as you can see there, we cover the gamut of areas of precious metals in IPMI, and it's not only things like refining and manufacturing, but it's also the support industries financing being one of the key ones, the logistical movements, insurance, all that kind of things. Those kind of people are present at all our events. I'm going to talk a little bit about our committees on the next one here. So we have a variety of committees that are fairly technical, and so it may not apply to you exactly as an individual in your company, but I'm sure that some of these committees would apply to people in your organization. So as an example, sampling and analytical committee. If you don't have state-of-the-art sampling and lab analysis techniques, you basically don't have a business. That's a foundational core competency, and we have worldwide experts that are part of that committee. We have one committee that's dedicated to precious metals refining, focused on PGMs, but we also have gold refineries present in that as well. You're going to hear a little bit about this today. We have a security and anti-money laundering committee, but a big part of that, the other word is responsible sourcing. And again, we have whole day seminars on things like that. There's some other committees as well, and I'm going to talk about the awards one in a few minutes. The 3 chapters that we have are our European chapter, we have a New England chapter, and a New York chapter as well. Again, we get involved in different things, as you know. I think it's prevalent here in Europe as well, but there was, when the precious metal prices really ran up on some of the PGMs, the catalytic converters were getting stolen off of cars, and so we're working with people in Washington on that, and also on all this tariff issues. We have people that are on various committees in Washington that are trying to help guide them through some of the issues we have with that. Again, so our refining is one of the key areas I think that should be interested to most Cibjo members. Again, so we have a who's who of refiners that are our key members. And a lot of people use the word refiners. We refiners at all stages. So what I'd call secondary refiners, so the people that are first collecting scrap, if you will, at a low end, or initial end, I should say, working their up to secondary refiners, all the way up to refiners like some of those in the room here today that produced, are LBMA certified and produced fine gold or fine PGMs at the end of their process. So I'm going to go through the rest pretty quickly here, but so knowledge and sharing is where I think we can really come together more. We have a lot of experts, as does Cibjo, and I think as we go forward and figure out how we further this collaboration, I think the key is going to be in knowledge sharing. I know we have a lot to offer to our current members, and we want to extend that to the Cibjo family. I'm going to skip. So again, along those lines too, it's really not just knowledge sharing, but it's really education and training. As an example, if someone attends one of this winter meeting event on the responsible sourcing, I believe it may be a requirement now in Europe as well, but I know in the US, you have to go through a certified training course every year, the people that are in charge of that for your company, and we offer that kind of certification. So in addition to working with Gaetano and his team, we also collaborate with other organizations as well, trying to extend the cooperation and working together as we go forward. Now, we have a foundation. So the foundation really is about science and technology. And we have an awards program. The chair of our awards program happens to be sitting in the first row here, Dr. Jonathan Jodry of Metalor. And it's a combination of 3 types of awards: Premier Awards, Student Awards, and Jewelry Design Awards. And so the Premier Awards is basically lifetime type achievements in awards. And how we got to meet Gaetano was Gaetano here was the recipient of this, this award, which is sponsored by Tanaka Company 2 years ago. So that's how we got to meet, and that's how this, this collaboration started. So thank you not only for the work that you did in earning that award, but in starting this collaboration. So thank you very much. We also have what I'd call our head scientific award. Henry J. Albert was a scientist in Engelhard. For those of you who know, that was one of the largest companies in precious metals before. Now it's part of BASF. And we've actually had several Nobel Prize winners win this award over the years. So it's a very prestigious award. And we started a while ago a Carol Tyler Award, which is for women in precious metals. Carol was the first woman president of IPMI. And where is she? There she is. So Ivana was the recipient of our award last year for her outstanding work in her career. And so let's give her a round of applause as well. So. The Student Awards is basically a PhD student awards program, and the majority of those students are in the chemistry field. So these are really, genius level students that that are working on a variety of precious metal projects and research projects, and they're honored every year at our annual conference. And the last one, for over 20 years, our New England chapter has had a jewelry awards program. There's a lot of universities in the area that have programs for jewelry, and some of the winners of those awards have gone on to work for companies like Tiffany and stuff like that. So we have a longstanding connection to the U.S. Jewelry industry, which is sort of centered in that Providence, Rhode Island area. We put out a scientific journal every year, and so I tried to be brief, but just wanted to give you, sort of an overview of what IPMI is about. Again, we're celebrating our 50th anniversary next year, culminating in our annual conference in June. So, with that, I am going to introduce Matthew here. So, Matthew Piggott is from Metals Focus. He has 18 years in commodity markets, working across 25 plus base and precious metal and specialty minor metals. He began his career at GFMS, covering the mining industry for precious metals. And prior to joining Metals Focus, Matthew headed up metals and mining research and consulting departments at a range of information businesses, such as S&P Global, Roskill, and Scarn Associates, and has covered various different aspects of the metals industry, from mining to demand modeling and sustainability. As Director of Gold and Silver, Matthew is responsible for Metal Focus's publications and on those metals. And if you're not subscribed to Metals Focus, I would suggest you take a look into it, because they're really experts, and as you're going to hear in a few moments here, and cover a wide range of metals and issues. And his personal coverage now focuses on North America and European demand, including jewelry. So with that, please welcome Matthew. Thank you.
Hi there. You can hear me all right, Larry? So I'm going to present to you today on demand for jewelry in a rapidly changing market, in classic conference style. Just today, as I've got the Bloomberg terminal open next to me, gold is hitting new highs and threatening to break 3,600 an ounce, which a week ago we were talking about 3,500 an ounce, staying as the maximum. Very fast-paced market, so I think a very appropriate title for the presentation that I'm giving to you today. So to start with, there are plenty of drivers for the current gold price. I mean, we can talk about dollar weakness, elevated central bank buying over a number of years, concern about stagflation in the United States, the inverse relationship between treasuries and gold, and concerns about the sustainability of US debt. And today we've had disappointing US jobs data came out just a couple of hours ago, below consensus, that made it more likely that we'd see higher than the market consensus interest rate cuts from the Fed to come up. So, this has been what's prompted gold to move up today to take another run at new record highs. But really, we don't have enough time to go into all of these drivers. So I'm just going to focus on certain aspects of the supply-demand balance that I think are more relevant here. But on screen, you can see the context behind this, and that's the extraordinary run-up in prices that we've seen for gold since 2024. And this year in particular, we've seen basically almost 40% increases in the average price of gold for every quarter, Q1, Q2, and then in July to August this year, price appreciation year on year. And we've seen some of the strongest periods of price appreciation for gold since the 1980s. So it's really been a very fast moving market in terms of prices. And this has had some sort of knock-on effects on the physical supply-demand balance. Now, one of the most important demand impacts for gold is gold jewellery. And so the elevated run-up in prices is not good news as far as volumes of gold consumption is concerned. So the weight of gold consumed in the first half of 2025 has fallen by such a degree, you see it on the right-hand side of this chart, that the consumption levels globally are falling down towards what we saw during the pandemic. Now, if you think back to that time, it was a very, very different world. We had to contend with severe free movement restrictions, constraints on retail operations, shops shuttering, businesses in distress. You couldn't physically get to many businesses in the physical gold markets, and that was really what was behind a large portion of the contraction in gold demand then at the time. You couldn't physically get to make the purchases. And I find it quite shocking that, just driven by the price, we find ourselves there again. But there is, a positive message that I think I should highlight there, and that's that if you check out the yellow line on this chart, it's that the underlying value of that metal being consumed each period has been continuing to grow on a long-term basis. So yes, tons of gold consumed within jewellery has been falling recently, but overall the quantity of money globally that is being spent on jewellery, just in terms of the value of the precious metal itself, not anything around more complex items and branded items and the margins, etc., that all come with a throughout the supply chain and a retail setup for jewellery sales. Just on the metal alone, we see increased inflows of money into jewellery still. So that's quite a positive message. I think it's a 4% compound growth rate since the pandemic that we've seen. Now, with that contraction in fabrication and the consumption of gold, the net call on the bullion market itself from fabrication. So if we take the fabrication of gold jewellery and we net off recycling, and a key point that drops out of that is that by the second quarter of 2025, the fabrication demand from gold jewellery could almost entirely be satisfied by the volume of gold returned to the market through recycling, which again is something that we haven't seen since the pandemic levels. Now, as a company, we're going to be looking closely to the third quarter to see if this trend accelerates and we actually achieve parity in that balance. And that will be all down to, whether we see fabrication having further losses or whether we see an uptick in the amount of gold coming back to market, which so far has been a little bit constrained. So just plotting that here, we've got the volumes of jewelry fabrication and recycled gold from period to period, and it really is quite stark that the real driver of this net reduction in the call on the bullion market for fresh metal is down to the sharp contraction in fabrication. It's not through any kind of meaningful response to the price for gold to come back. And the drivers for this restraint in gold recycling are different from period to period. It can be, in the short term, it can be things as simple as being weather-based. If you cannot get to a shop where you would be taking your material back to sell it, then you will not be selling during that period. There's the rise of the deployment of gold loan structures in one of the key markets, India. And there's also underlying this an expectation of higher prices that holders of gold near to the market who may be willing to sell, they've wanted to keep hold of that gold. Also in areas of instability in the world, particularly around the Middle East, there's been a holding on to gold jewelry and not returning it to the market for other reasons, holding gold as a safe haven, notably. Now this ratio of metal reaching kind of parity, the long run average of fabrication levels relative to recycling is usually that fabrication runs on average at double the rate of recycling. That's been the trend for much of this decade and the last decade too, with the exception of the pandemic. So I mean, within that global contraction of the number where we've seen fabrication drop so sharply for gold jewelry, where is it concentrated? I've put on the screen two tables, the top 5 largest fabricators of gold jewelry and the top 5 consumers. And fabrication is, obviously where the jewelry is manufactured, and we treat consumption as, if you like, where the gold is purchased. So give you a good example, because India and China are the top 2 fabricators and consumers. Italy is a great example, and also the United States. Italy is a top fabricator, but it is an almost insignificant consumer of that gold. It has a very healthy export market to a number of key consuming jurisdictions in the world. And conversely, one of Italy's main partners, the United States, is heavily reliant on imports to satisfy its consumption needs. It only manufactures maybe about 50% of the gold jewelry that it actually consumes by weight. Now, taking a look at those two largest countries, India was down by about 17% in the second quarter. China was down by 20%. This is year on year. You can see I've highlighted the 2 charts at the top. There's some yellow bars to show you the like-for-like quarters in the second quarter. It's, a falling trend, both in India, China, and then the rest of the countries of the world bucketed together in the grey chart. It's pretty consistent drops in the consumption of gold as jewelry in all jurisdictions. Now, overall, the overriding trend, is one of high prices inhibiting purchases. It reinforces a multi-year trend of a decline in terms of volume, and the particularly sharp price increases in gold have led to a more pronounced decoupling of a trend of consumption. So consumption in weight terms, a falling amount of gold ounces being purchased in jewelry in the price-sensitive markets, compared to that long-run trend that I showed you of growing value, growing the amount of dollars coming into gold jewelry consumption. But in those 2 key markets, some of the drivers, some of the feedback that we get from our field research, obviously it changes from quarter to quarter, but, we can summarize it into sort of a few main buckets. There's a long-term trend of the lightweighting of gold pieces, so a reduction in the weight of jewelry pieces, maybe a move to hollow pieces. So for any given piece of jewelry, there will be less gold per piece. And that lets you, at the retail level, maintain price points and try and keep consumers involved and keep the money flowing in. There's a move in different markets at different rates to lower caratage over time. So moving maybe from 24 or 22 down to 18, 18 to 14, 14 to 10, or maybe to 9. Over time, it's very gradual. These things don't happen very, very quickly, but the sustained increase in prices over multiple years has just led to a slow drip feed of this migration to lower caratage. And obviously low carat for any given piece, there's less gold involved. So less in weight terms if we're looking at the overall supply demand balance. We've had some instances recently of liquidation of gold jewelry inventory and switching out into platinum. Now, this has been, installing more platinum counters, particularly over in China, but that's not been a completely one-way trend. In the second quarter, this was kind of a little bit overdone, and the pace of switching slowed rapidly in the second quarter in platinum. But key with all of these kind of changes and trends that happen over multiple years is, how sticky are they? Once the market has migrated to lower caratage, how likely and how fast is it that it could turn back if prices were to go the other way? And I think our consensus is that a lot of the fundamental shifts that are taking place are going to be structural in nature, and would take a very long sustained periods of low gold prices to undo those before it starts to flow the other way. I talked about the United States being the third largest consumer, and no doubt there's been talk already today about the heightened impact from tariffs. It's certainly something that I've heard a lot from people involved in the supply chain when I've been speaking directly to them. And in the first 6 months of trade data that we've got from the United States coming through, you start to see a really quite heavy drop in the imports of gold jewelry to the United States in weight terms. So, charted on there, this is as we take the value of jewelry going into the United States from the trade data, we back out platinum jewelry imports, and then we're working out what that is from very different markets and different carats and the markups and margins on that to calculate what we think is the impact on tonnage of gold going into the United States. And we've got drops of 30%, 40%, 50% from key importing markets for jewelry into the United States. And overall, this averages, for globally for imports to the US at minus 30%. And I think bear in mind with this that this is including some activity that has helped volumes, for example, exports from India with fabricators trying to front load imports to the United States to escape and get ahead of tariffs that they knew were coming. So has the fabrication number in India and the import numbers to the United States from India been stronger than actually they will be in coming months? But behind the reduction in imports, US jewelry consumption itself, it's obviously been hit, same as everywhere else, by rising metal prices. And this is translated into falling unit sales for gold jewelry. But similar to what I said about the raw metal value in jewelry going up through time, we've seen for the first half of 2025, the overall spend in value terms in the United States on jewelry as a whole sector has been rising. And it's been helped by lower prices for natural diamonds, lab-grown diamonds, particularly in large carat sizes. You see reductions in prices there of 30 or 40% down. And this helps at the retail level to preserve margins. It doesn't compensate for huge tariff increases on imports. But there is a positive note there about the amount of money still flowing into jewelry. And platinum jewelry in the United States, on the other hand, has performed relatively well in terms of unit sales It's one of the key consuming countries of platinum, behind China and India. Obviously there's some consumption in Europe as well. But unit sales have done reasonably well in the United States. So we're talking about single digits, flat unit sales rather than down. And in a market where prices are up, and you might think that disposable income might be constrained, that's a very good result for the jewelry sector there. So I've mentioned platinum, and this year we've seen a notable uplift in the platinum price going into the second quarter. And you can really see that, a lackluster platinum price hovering, between 900 and 1050, really quite range bound for quite a time. And then it's taken off quite sharply in the middle of this year. And that's sort of led to there being a lot of attention alongside the gold price rising so dramatically. There's been a lot of chat in the market about potentially the widening gold platinum differential and whether there should be a shift from gold into platinum in the jewelry sector, particularly between white gold and platinum, liquidating gold inventory, changing it to platinum inventory that I mentioned before in China. For example, the increase in jewelry counters in Cibjo in Q2. And this is really driven by a belief that platinum is undervalued and gold is very, very expensive, and therefore consumers should make some sort of a shift because retailers can make better margins on platinum. The overall global trend for platinum jewelry in the first half of 2025, consumption by weight has grown by 21% year on year, rather than gold heavily down. And there's been growth in most regions for platinum jewelry. And for more detail on that, I'd encourage you to read an upcoming report by the World Platinum Investment Council to see a bit more research on the platinum side. But I thought I would, address this a bit more by looking at a few comparisons between alloys. These are very simplistic approaches, looking primarily at the metal content. So I took some real world alloys and their specs, and worked out kind of what kind of prices we'd need to be looking at and what kind of gold platinum ratio we'd need to be looking at in order to achieve sort of price parity before we begin to look at the different changes in fabrication charges for platinum jewelry, and then what kind of margin would be therefore available for the fabrication, wholesale and retail chain to share between them when contemplating what kind of market would be available for that switch. And I started looking at 18 karat white gold with palladium. You see all the specs on the screen that I've used prices. Well, I thought a $3,500 gold price was representative. Today, it's no longer representative. It should be 3,600. And we work out what based on the density is for a similar size. This is a plain ring I'm using in this example, using a 5-gram ring for 18 karat palladium white gold. Work out what the contained metal cost is. In this case, it's $444 of metal in there. For that, you'd need a 6.3 gram PT 950 ring. This is platinum ruthenium alloy. And the metal cost in that is much, much lower. So before you then look at whether you've got what you've got to play with for the additional fabrication, labor charges, etc., to be absorbed throughout the chain for working with platinum there, you've got a 21% margin to play with, better on the platinum side. So you can start to think, well, maybe this could work as a shift from white gold. Now there's other factors in play, so this is not a done deal by any stretch of the imagination. So then I looked at the platinum price ratios for a 14 karat gold alloy. The reason I'm using 18 karat white gold and 14 karat white gold is that Europe and China have healthy 18 karat and 14 karat gold markets. They've both got a decent slug of palladium bearing white gold in them. So I did run the same numbers, and what you come out with there. I think I'll just pop back to the previous slide and say, you needed a gold platinum price differential of 1.58 there. So, this to achieve price parity, you'd need a platinum price of 2,110 to make the metal in these alloys the same. When I ran the numbers for 14 karat white gold with palladium, we'd need a platinum price of 1,586 to get price parity on the raw material. That would give you a gold platinum ratio that you'd need for of 2.1. Now we're at 2.5 roughly with a platinum price of 3,500 and a gold price of 3,500 and platinum price of 1,400. Then I also ran the numbers for a 14 karat white gold alloy, which would be a nickel bearing alloy rather than palladium. So copper, nickel, zinc. The value of the base metals is negligible. You run the numbers there, and you actually come out with a PT950 alloy has a negative margin for you to play with. So, you don't have any price advantage with the raw material costs at these levels to be substituting a 14 karat white gold ring with a PT950 ring. Now, they currently are being priced on the market. The prices that I've used as indicative numbers, these are taken from real retailers, so they're not made up. I purposefully used the same prices. I've seen the rings, being put out with a price differential of something inconsequential, $14 or $15 and really it's about giving the choice to the consumer there between the white gold and the platinum, and the margin behind that is hidden from the consumer. So we need a gold platinum ratio in the price differential of 2.71. We're at 2.5 roughly. So I've charted the differential for you. I spoke about the expansion in the differential between gold and platinum in price that prompted these conversations to be in more earnest or to accelerate. And since the start of January, you can see the change in the dark green line. This is the ratio, and I've plotted the red lines across, which are showing you where those price ratio lines hit. And so, you start to see the price differential and the ratio go up in late 24. And then you've seen with gold's further run up in prices and the platinum increase in price up to, the 1,300, 1,400 level, being between those levels, you then have a sharp contraction in the differential, which makes it difficult to see how, a switch between some of those white gold alloys with platinum would work for direct switching like that, assuming you could make the economics work on the margin side with the additional fabrication and labor costs, etc. So looking ahead, where do we go from here? I've plotted our forecast for the gold platinum premium and the accompanying ratio. So, these are quarterly averages for the next few quarters from our forecasts, and obviously you're always welcome to purchase our forecasts and see the drivers of the prices themselves and what's going to happen within specific segments of the industry. But we see that the recovery in the differential, in the short term, we should see it climb back up. This is about having platinum fall back down slightly and having gold continue really to go up in price successively over the next few quarters. But if you're looking at these levels and comparing to the raw material costs that I've just shown you and ignoring all the other factors that would obviously come into play, you could see that, there won't really be enough in those price differentials to meaningfully incentivize a move to substitute, a 14 karat white gold alloy to platinum. And that's important because, the US is mostly a nickel based market. The share of white gold as palladium is reasonably low in percentage terms of the white gold market, and the proportion of 18 karat where you'd think that there is more of a chance of substitution, that's quite low in the United States. a lot of these conversations are happening in the United States. So in effect, I think, it's going to be a difficult proposition to push through some of that substitution for some of those caratages. And I think that really concludes what I wanted to go through today and somehow link it through to jewelry and some of the topical items. We've had the deep contraction in demand for gold jewelry and weight terms and the structural shifts at play around the world, caratage. But we've got the positive trend of money flowing into jewelry is still growing. It's just really how does the industry look to capitalize on that money still coming in while still preserving margins. I think that's what everyone in the supply chain really is focused on at the moment, rather than absolute price of gold itself, because you can still have very viable businesses by adapting your product mixes and the structural types of products that you are producing to cope with the changes in the market. And that's why we see those structural shifts coming through. So hopefully there's something positive from you to take away there, rather than demand destruction and structural change in the market forevermore.
That was particularly enlightening with the differential analysis you made with the different alloys, I think, for a lot of the people here in the audience. So with that, I just open up any questions for Matthew from the floor here. Well, you must have done a very thorough job. So thank you very much, Matthew. Appreciate that.
Thank you, Larry.
If we could have the agenda slide, where's oh, I'm just trying to think who was next. We don't have the agenda slide here, so I think it's John, right? So our next speaker is from the World Gold Council, John Mulligan. Please welcome John. Thank you.
Thank you, everybody. Do we have my slides? We do. That was quick. Thank you. Yeah, so you heard an awful lot there about the balance between, in the supply side, newly mined and recycled. There has been, in the last 5 years, I think, some significant questions about what do we mean by recycled gold. And so I'm kind of going to quickly, hopefully, summarize where we are now with regard to those questions. If I can get this to work. Yes. So several years ago, people started to ask, as I say, how can we be certain we're talking about the same thing? And within the industry, there were a number of established definitions of recycled gold. So we had the OECD defining recycled and recyclable gold, and I won't read the text. You can read these slides at your leisure if you wish. But nonetheless, that provided a kind of foundational reference, but it wasn't very specific at all. In fact, anything that had been previously refined and was being re-refined was recycled. The LBMA had a little more granularity, a little more detail about what we call refining, but nonetheless, it was still fairly general. And again, anything that is gold-bearing and being refined that doesn't come from a mine is essentially recycled. And the RJC had their own slightly more granular definition. So these are the kind of big market players or responsible sourcing frameworks and the definition. The recycled definition used by the Responsible Jewellery Council has changed, and I'll come to that in a second. But what is the issue? What is the problem? Why are we concerned about this definition? Well, actually, what we've seen is a growth, a plethora of different categories, different classifications, trying to refer to the same thing. So we have as I say, companies producing their own brands and classifications. And then we have product labeling using different names for recycled. Now, again, what is the problem? Why not? You know, why not call it what you want? Well, actually, this kind of description here basically poses some quite significant issues and challenges. And basically it says, and again, I won't read it all, but if you start to fragment definitions, if you erode consistency, you make it harder for buyers and sellers in the market. You make it harder for them to know that they are buying and selling the same thing. And that slows down trading. It also potentially reduces inefficiency, and ultimately it can erode trust. So it's really important that we start to be more coherent, convergent. And as I say, the question is, we know where we are, we know what the problem is to some extent, but I'll reiterate it. What is the consequences of that problem? So I asked an AI program, I won't specify, please summarize the controversies and issues around the term recycled gold. And I got these answers. You get ambiguity in definitions. You get greenwashing and misuse of terminology. It actually can potentially widen traceability gaps. And there becomes this tension between other sources of gold and what we saw particularly and have seen in the last few years, particular tension with sourcing from artisanal and small-scale gold miners who basically saw themselves competing against a different type of gold. What is the solution? And so what I've got here is a definition which basically says, if you move towards standardization, what are the benefits? And the definition here says standardization produces or involves adherence, and the highlighted bits are important, adherence to predefined criteria set by international or industry-specific bodies, so basically set by experts who know what they're talking about, who then come together to produce a common understanding of product expectations. That is why we try and harmonize. That is why we try and work towards standards. So we know the problem. We have an idea of what the solution might look like. What has that meant for the industry recently? Given that need for clarity, consistency, and standardization, who else would you possibly turn to but the International Standards Organization, the ISO? And so ISO took on this role, took on this task, challenge, as it proved to be, and there was a standard in development called Standard 21261, which was the three-part standard. I won't go into too much detail. There's plenty of detail if you wish. But there was a proposal for recycled gold, responsible recycled gold. And ISO was the ideal candidate, as I mentioned, because its two key missions are to facilitate international trade and to protect consumers. And I think that I'm guessing every single person in this room understands the need to protect those objectives. So, and you won't read the small print, but this basically just says these are the reason why ISO is so significant, why standards organizations are so significant. And the key point I'd like to mention is the little bit you probably can't read. The organization brings global experts together to agree on a best way of doing things. This is what we mean by good or best practice. So ISO took on that role. The particular technical committee that did it was Technical Committee 174. You might see my name there as the current chair. However, the person who did most of the heavy lifting at the time is also in the room, Dr. Jonathan Jodry, getting another plug today, John. And under one of the working groups, basically over a period of, I think it was 14, 16 months, that set of experts under Technical Committee 174 attempted to arrive at a better standard for recycled gold. I should also pay tribute to the fact I stole a lot of these slides from Jonathan, so some of them are slight modifications. This one looks remarkably like his, because it is. But what do you differentiate between you start to need to differentiate between what are the inputs into the re-refining process or the refining process, and how can you differentiate them so you can say, this is a recycled gold product, this isn't? Well, mined gold is mined gold. It's newly mined gold. It isn't recycled. Fairly simple. Quite significantly, however, when we look at the RJC definition, the RJC had already excluded investment gold from the recycled gold product. And that was because there'd been a lot of concern that by reforming investment gold, just by taking investment gold in one form and turning it into another, you could call it recycled. And so the definition said, no, that is not the case, this definition. You could call investment gold recycled investment gold if it was wholly composed of those inputs. Now, I'm not going to list all of them, but this shows you the segmentation of pre-consumer and post-consumer gold inputs. And it starts to say, here's a bunch of categories that you can increasingly use to transparently map what we mean by the inputs into recycled gold. So there's a relatively clear segmented definition of what can be called recycled gold and what are the valid inputs into the recycling process as opposed to all refining. Now, very significantly for large parts of the world, there is this type we call mixed gold. And for a lot of refiners, this is what gold is, basically. It is gold that comes from multiple sources, is re-refined. We're saying that can't be called recycled gold unless all of the gold is in the recycled categories we mentioned. It is just mixed gold. Some newly mined, some from investment, some from recycled, what we would have called recycled or scrap sources, but that can't no longer be called recycled. So this was the proposal. And these are its benefits, we think. I mentioned those subcategories. They're not enforceable, they're voluntary, but nonetheless, they allow you to start to move towards a greater, more granular process in terms of transparency. Very usefully, they're aligned with existing standards. So the ISO suite of environmental standards, widely used around the world, they're in line with that. They're actually a little more stringent, and they're a little more stringent than some of the ISO standards for other recycled products. But they are aligned. And they're aligned particularly when you start to bring in that pre-consumer, post-consumer materials part of the definition. It also actually, once you acknowledge and understand that segmentation, it also allows you potentially to better manage your supply chains and your different counterparties. The new category of waste recycled gold, we thought would actually potentially bolster promoting the recycling of gold from low-grade sources, e-waste and so on, because now you have a segmented named form of input into the recycling process. And again, I mentioned investment gold, which was already seen as problematic by some parties. And you've taken all of these and you basically say, okay, now we have a stricter body of criteria. This should help us prevent greenwashing and the use of recycled in ways that, frankly, it may not be justified, particularly in markets where recycled has a particular implication, often referred to as the green halo. I would like to point out that in the perspective from Europe and the West is not the same as the perspective from other parts of the world, where that green halo actually isn't so significant. Recycled, for a lot of refiners in parts of the world, just does mean a circular process. So, without going into too much detail, I'll keep this quite quick, the ISO process failed. The ISO process failed because what I haven't talked about is part one of that suite of standards, which tried to define the responsible aspect. It said, okay, well, if you're segmenting your inputs, you need to do so with responsible counterparties, and therefore you can ask and define what we call responsible sourcing, responsible gold, and we wanted to combine the two in the standard. So you'd have responsible recycled gold. For some voting members within ISO, and ISO has over 170 voting members, not all in this committee, but nonetheless, for some members who have the vote, it's fair to say that ask, that requirement for that level of transparency proved uncomfortable, and they voted against the whole suite of, they voted against Part 3, but in effect, they voted against the whole set of standards. So what do we do now? We've got a useful standard. The vast majority of experts that developed the standard, and there were a lot of experts in the room, acknowledged it was an enhanced, improved standard. So if it's not going to be an international ISO endorsed standard, how else can it be used? So we have been, as an industry, and I should point out I wear a number of hats, both as an agent of Cibjo, as a World Gold Council employee, and also as an ISO chair. And I thought, with colleagues and associates, we should still try and take what the standard was for, which was to align the industry, to align and converge around a definition, and we can still use the definition even if it's not ISO endorsed. So this is where we are now. The Responsible Jewellery Council, I mentioned earlier, they moved on, have now embedded a definition of recycled within the revised chain of custody and code of practice standards. The LBMA Responsible Gold Guidance 10 is unfortunately delayed. Nonetheless, the LBMA have signaled that they are going to use it as a core reference when they reconsider the definition of recycled gold. And we would hope that would be accelerated quite soon. The Responsible Minerals Initiative may not affect many of you. It's largely the electronics and automotive industry, but nonetheless, they are acknowledged and said they would consider engaging with their members on it. The World Jewellery Confederation, Cibjo, has accepted it as a core reference point. It is now actually in the process of being embedded in the Precious Metals Blue Book. So the Cibjo reference will embed that definition. It becomes standard. This has already been announced in a press release, so this is nothing new. And the World Gold Council, which convenes another coalition of associations, has recommended the reference point to its members, and that's 14 associations covering the gold supply chain all the way from China, the Middle East, India, and the UK. I will make one point, as this is an IPMI co-hosted event. IPMI aren't on that list. It would be great if the IPMI started to consider utilizing and recommending the core criteria to its users. But we are moving towards industry alignment. And I think that is key, and I very much recommend that you familiarize yourself with the overall criteria so that then when discussions about recycled gold start to occur and people start to challenge the industry's ability to recycle, you can respond by saying, actually, there is fairly firm criteria. There is a fairly robust set of reference points we can use. Now, I mentioned the RJC have already embedded it, and so it's embedded in a certification scheme. And again, I know the text is too small for you to read, but if you were able to read that, you would notice it looks remarkably like that graphic I showed you in terms of how it segments pre-consumer recycled gold and post-consumer recycled gold. And the RJC, justifying its or explaining its inclusion, basically made a few key points. They made one point that it was developed in collaboration with the organizations I mentioned, that this was a collaborative definition, Cibjo, World Gold Council, LBMA, etc. And they explicitly say they see the definition as reducing the opportunities for greenwashing and also improving supply chain management and the responsible sourcing as expressed via the RJC's chain of custody and code of practice. So that's something that we would like to encourage. We think the momentum's there, but like I say, it's important to recognize that we have made progress and we are moving towards industry alignment and convergence. Thank you for your attention.
Thank you, John, and let me also thank Matthew with the great presentation that has been done previously, as well this wonderful presentation from John. I believe that the alignment with all this organization representing the industry is another extra proof, and then we'll see also during these days, Mrs. Iris van der Veken, Executive Director of Watch and Jewelry Initiative, this alignment is going to bring over what quite often the bureaucracy of legislation is going to a different speed. Due to the fact that we had our previous colleague going a little bit over time, but I would like to ask Alessia, where Alessia is. She's on the phone. Alessia, could you please, so due to the fact that you are, I understand you're busy here, the floor.
No, sorry.
No, that's okay, the floor is
No,
yours.
it's not mine, it's from him.
Okay,
Come.
Giorgio and Giorgio Villa, Alessia and Giorgio. Please, the floor is yours, thank you very much.
Sorry.
Thank you, Matt. We speak to speak together in free. Also, the design, Michela, please come
Please,
here.
Michela, come
Well, our talk is more easy, less number, more easy situation, and to explain something arrive. Okay, the market is very touched for a price, of course, no. And if already we go in platinum, we don't go. We can use. We can start to say something very easy. Nothing new. Just a moment. Okay, this is what's arrived. No? There is how much is the value of gold or precious metal inside the jewelry? Depends. Brand, you saw the brand have fantastic jewelry. The same piece is in aluminum, in titanium. The price is the same. No? This is very clear. And design, you have design, art, and everything. No? Is very, very important, this kind of a market where they work for many, many years for arrive in totally different position from the metals in the value and the design of the object. And after me, Alessia is something work in this matter for arrive to have a jewelry not for the weight, and Michela for the design. Now, very short and fast, no? Okay, this is what's arrived in gold and platinum. Everybody know because everybody spoke before. This is what the market see around world. No? Because I tell you a little story. About 15 years ago, we start with fantastic new alloys for jewelry in palladium. Was really very, we patent, we do big job, no? We go to a producer of jewelry, we produce chain, and we went to some exhibition, and we understand nobody in the world know what is palladium. It's not any connection with jewelry, and is a precious metal, have 90-50 content, everything, the qualities were fantastic, the color was fantastic, but everything is finished in 2 seconds. This is the opposite, because you have worldwide, the image is platinum, is the top. And gold is back. Now, this is important because this means if the same jewelry in platinum and gold, you can have also the price more high in platinum. Also the cost is 50% or something similar. But, okay, this is something numbers, you know, no, about the contents between 18 karat and 1950 gold and etc. But this is not important, I think. The important thing is the world afraid about start to work in palladium. Why? Loss, technology, difficult, etc., etc. And something is, I'm agree about something of this, because the first part of work in the jewelry is high technology, because there is high temperature, no graphite, vacuum melting, hammering, analysis, lot of cost, and it's not easy, but very easy when after the semi-finish arrive in the jewelry, when you have RJC certificate quality, you know the content, you know the sustainability, you have a ribbon for melting, continuous, and this is very easy because you can work same gold, no? And the market must open the mind to this opportunity. The same when you go in our semi-finished product for wire or sheet, etc., for the produce. When you have this kind of material in your hand, later the work is very easy. Okay, you have a little tension because it's better not mix platinum with gold. The tools are maybe a little different, but the opportunity can be a big opportunity. And also it's big opportunity about image, because the last slide, the market, the top market piece in any brand, in any line, is platinum. This means if I am a producer of gold jewelry and I have a new little line in platinum, my image of a company grows. And I think this is opportunity. When there is trouble, it's always important try if we can find some opportunity. Alessia work not in weight, but in something different. Please, Alessia.
Thank you. Thank you, Giorgio. Buongiorno a tutti. I will speak in English. So I don't know if you remember me last year. I was with very black hair, and I speak my beautiful English, okay? So I'm working with another way. So for us, gold means something completely different. Obviously, for us, the increasing of gold could be a very big problem. And the problem we have in this moment around the world is a problem also for us. By the way, I want to put attention on a thing very, very important. Gold is something economic, and it is okay, but it's also something emotional, okay? Because a brand, for example, now you know the price is better than me. What I want to say to you is not only economy, it's craftsmanship, art, heritage, and emotion, because it's for us a kind of a tool, okay? We use gold for make design, for create trends, for create emotion, to represent who we are. And this is my case history. I want to also put the attention on this, my personal case history of my factory, because like a collection is the most important collection we have, is our identity. Because if you take a necklace or you take a bracelet and you will put in this way, you will see our name, you will see a C. So for us, is our identity. And this is my new campaign made last month. And if you come to my booth, a very, very simple booth, we change it completely with all LED. So you will see, it's just gold, just with one small diamond. And this because for us is our pure identity. And just gold can give this identity for us. So beyond the economy, there is the identity, the memory, the timeless beauty, and a transformation. So with gold, with the design, we can create a story. We can give you a story to wear. So this is the meaning an identity for the brand. A lot of opportunity, a lot of changes, challenges, a lot of things in this moment. And we want to put the attention or the opportunity on all the challenges, obviously, but all the opportunity we have. I'm closing my very small, yes, with this, because the price of gold may change, but design remains the bridge between precious matter and the human emotion. And also, I want to tell you that last year, I don't know if you remember me, but I closed my moment here on the floor, telling you that there's no young generation in front of me, and there's no young generation here as a speaker. So this year we have a young generation, okay? And she's a student, a very amazing student. She's graduated, yes, but she's thinking about the future, not just for her, because she's thinking about the future of her generation. So I think that the floor is yours. Thank you. Michela, but she
Michela Maurizio. Good afternoon. I'm honored. First of all, I'm honored to be here today, and I would like to thank Alessia and the organizer for giving me this incredible opportunity. I am a firm believer that emotions, that jewel has the power to evoke emotions and inspire questions. It's awakening a sense of wonder, born from unexpected, and sorry, it's emotion. I talk about emotion. And offering an opportunity to redefine its meaning and perhaps to be remembered. For this vision to become a reality and resonate with an audience, the designers must have a clear and intentional purpose. What message are we trying to convey? What emotion do we want to trigger? Which element, it be a shape, an element, an emotion again, deserves to be highlighted? This, as a designers, is very important that all of these features help us to shape our vision of the final experience. The key of achieving this is through the creation of a new methodology. The new methodology that I developed in collaboration with Alessia offers new tools and solutions for for the designer, for the research of designers. The core concept, which I call zone, is an innovative technique that helps designer to gather information and which then selected and order. And this approach helps them to find a solution that is more impactful. By channeling this emotion, we can develop design that convey genuine value and avoid the irrelevant element. This is the focus. We need to create a focus in a jewel. In this way, and to conclude, jewelry should be capable of connecting with other disciplines and looking beyond its traditional boundaries, whether in terms of materials, shapes, and user experience, the final user experience that is very important. And I believe that only through this openness can jewelry truly evolve and renew itself over time. And that's all. Thank you. Thank you.
Thank you very much. As Larry said at the beginning, the cooperation between Cibjo, the World Jewelry Confederation, and IPMI has several aspects. And we have heard one of those aspects in what means the, let me say, the romance of the precious metals, that apparently is a piece of metal. You know, when you see an ingot of gold or platinum, of every other precious metal, looks to be, you know, like a big brick, and then we built a house. Well, it will be quite expensive, considering the price of precious metal, both gold, silver, and platinum. But in the meantime, the serious application and what we are conveying to the world, generally speaking, in order to inspire a young lady like this in bringing us something that is completely new. I can see in the room top jewelers, architects such as Augusto and wife, or other friends here in the room. But yes, at the end of the day, this is what we need, which means inspiration, which means through the inspiration, make something that bring all of us through the young generation, which in any case are our future, to go forward in the direction of what is satisfactions of our consumers. So I want to thank the three of you for this wonderful presentation. Larry, please, unless you have some question now. No questions? Very good. You have been very clear. Thank you very much. Thank you.
Okay, so we're going to move on to responsible sourcing, and Alessia Vanni from Italpreziosi is going to lead that discussion, but I'd also like to invite to the stage the panel, Dr. Jonathan Jodry from Metalor, Irish van der Veken from the Watch and Jewelry Initiative, and John Mulligan again from the World Gold Council.
Okay. Time has flown, and I will try to be brief in the presentation so that everyone can speak. So, I'm Alessia Vanni, CSR Director at Italpreziosi. For those who doesn't know us, we are a precious metal refinery, certified BMA and B Corp. And this is Ivana Ciabatti, our CEO and founder. Today, we are going to focus not just on responsible sourcing per se, but also on the impact. Of course, we see in this slide what is about when we talk about responsibility. A lot of standards, a lot of regulations, and there's a lot out there, and sometimes it creates confusion within all of the stakeholders in the supply chain and in the industry. And we saw like the efforts that the industry is doing actually to make things easier, like with the ISO work. But today I will go brief, not through all of the standards, of course, I will just give a brief update because since last year, for those who were here, we talked about the CSRD, the CSDDD, and so what were the impacts on the governance structure and procedures for company, where due diligence, social due diligence, and environmental due diligence should have been involved within them. So you saw the stop the clock. It's literally the name of what was the latest updates that made the CSRD and the CSDD postponed a little bit. There have been delays on the reporting, but delays doesn't mean not happening. So it will still happen. Companies have more time to prepare, so it's better to not lose time and get prepared, really. Why responsible sourcing? I always say this because responsible sourcing is risk reduction, cost cutting in the long term, reduce of social and environmental impact, and involvement of all of the actors in the supply chain, but also meeting the stakeholders' demands. To do responsible sourcing, you need a strong governance structure. You need internal intelligence for risk assessment, and you need to meet relevant standards, as the one we mentioned before, which change from mining, to jewelry, and to refiners, and so on. But we need to go beyond compliance, and as you see here today, the idea is not just talk about responsible sourcing per se, but talk about impacts and what responsible sourcing can bring, what regulations are doing. Because at the end, what is the idea is sharing value and create value within all of the supply chain and create a positive impact. And I will use the word impact a lot. There are many ways that we can improve. I will briefly give this example because it's important, as also Larry mentioned at the beginning, the sharing of the knowledge, which IPMI is doing and other initiative does, we need to do it within our supply chains too. And I always say this to invite all of the stakeholders here to do this in their companies too. Transform your KYC, know your customer, in an EYC. Empower your customer. Get to know who they are and help them to improve with you. There are many ways and creative ways we can actually work to make a difference in the supply chain. Here an example of the website we created to share know-how and information with all of the stakeholders. This is also a small hint about a new project that will go out, which is called Empower ASM, which is an app, mobile app, made for supporting ASM, small-scale miners, in accessible, free formation, educational contents from their mobile phone. But what is it all about, the positive impact? Is being transparent. It's about sharing know-how, is paving the way for change, improving the supply chain, but it's also about advancing climate and nature roadmaps. So, last but not least, I always remember this in every speech I make. There are free tools out there that help you to measure your impact. This is the BIA, the Benefit Corporation Assessment Tool, that can give you a number that is the resume of your impact divided in governance, nature, environment, and social. Use it, and I hope then in January you can tell us how it was, because we will do an event on B Corp. And I would like to pass the floor to the panelists. We have an incredible panel with me today. There's Iris van der Veken, AD from the Watch and Jury Initiative. We have John Mulligan, that was here before speaking, that again is here both as World Council but also Cibjo, and Jonathan, our dear Jonathan Jodry, that is from Metalor. So we will have different perspectives from mining sector, jewelry, and refining. So we have a full spot on what is the state of the art of responsible sourcing. And I would like to start with Iris. I would like to ask you, what is the initiative, the Watch and Jury Initiative, doing on human rights? And if you can explain how policies are evolving on the topic of due diligence, and why also, if you have time, why you invest so much on gender?
A lot of questions. So first of all, good evening, and I'm very happy to be here in Vicenza. As you know, Italy is very close to my heart. I really liked that you kind of give a reflection on legislation, because we should not forget that today, even though some policies in Europe are taking a bit of a slower pace because of political influences in other sides of the world, the direction is the same. So what we see is that it's all about understanding your supply chain. And actually, that's nothing new. And I really like what Michaela said, because this is the young generation. We are an industry of creativity, and we are an industry of beauty and emotions. And with that is trust. And if you want to show trust to that consumer, you need to understand, where am I sourcing from? Which regions of the world? And not just from a human rights perspective, and that's very new. You know, not even understanding what are some of those issues in some of those countries. And let's think about, for example, colored gemstones, 90% artisanal. Let's look at some of the regions in the world where there's conflict. So first of all, you need to understand, where am I sourcing from? And then you need to look at the ecosystem. So you do need to look at human rights. You do need to look at not biodiversity, on nature and climate. And that's where, and I loved what you said, Larry, that's where it's becoming much more scientific and data. And this is becoming much more complex also for organizations. And I think this is where the Watch and Jewellery 2030 comes in. We were co-founded only 3.5 years ago by Maison Cartier, delegated by Richemont and the Caring Group. And we are not a standards body. I think it's very important. We want to work with standards bodies. We want to work with the whole industry to accelerate the industry on 3 interconnected pillars: climate, resilience, biodiversity and nature, and inclusiveness. And in inclusiveness, we focus on deeper due diligence on human rights, environment, and gender. So these are all interconnected topics. What I also think is very important is the solutions we've built, and there's not enough time today, but please, I welcome a side conversation, are all solutions aligned with regulations. So we've been working with the European Commission, we've been working with stakeholders on building a nature roadmap, on building models on how to do due diligence on nature and human rights, because it's such a new topic, to help advance the industry. What we're looking for is front runners. We want to kind of almost, help the industry advance on that vision. And we do this really well together with Cibjo. And I would like to thank Dr. Gaetano Cavalieri, because at the end of the day, he is our leader, always uniting the industry and bringing us together. And their education is key. So if you ask me, what is the Watch and Jewellery 2030 doing? Well, I can tell you very much, we're all about action. We've been building tools aligned with policies and regulations. We're very much following policy very closely. We've been building an accountability mechanism, again, to help companies report on that progress, again, aligned with policies and regulations. And allow me also to say one topic about gender. Women, rise in this room. Stand up, women, please. Can we have the women rise in this room?
Le donne si alzino.
Okay. We need more women in our industry. Our industry is all about diversity of markets, about inclusion, and women influencing jewelry. And again, I'm very happy with what Alessia is doing with Michaela. We need young designers. We need more women also at the top. And that's why gender is so important. And I think this is a very important program that we are building for the industry with UN Women, asking CEOs, men and women, to commit to 7 principles, the woman empowerment principles, in workplace, community, and marketplace. It starts with the commitment at the top, and then building policies. And I think for our industry that is so dependent on consumers, women who are influencing the purchase of jewelry, and we see also this big trend in watches, we cannot be left behind. And again, I invite you to go to our website. Happy also to have side conversations on some of those tools that we've built.
That was on the top of all of the question was very well answered, and you touched many, many points. Meeting the demands, that's an important aspect, but it's also about creating a strategy for the company to thrive in the long term, because regulation change. And on that, I would like to go to Jonathan, who's representing a company. And at the end, we are seeing in the latest years, many companies have been starting to report more and more, and they're starting to report their progresses through their CSR, ESG reporting. And do you think those are enough to make the difference and to create progress within a company? And how do you think this new regulation will impact on them?
So first of all, I have to precise, I'm a scientist, at least by training, and I feel a little bit at ease in those environments where we talk about jewelry, beauty, design. It's not really where I'm most comfortable. And one thing for me, which is very important, it's data, it's information. And the reason why a lot of people in my field, scientists, are not necessarily comfortable with concepts like social responsibility, it's because it's very difficult to quantify it. And if we want to make an impact, we first have to be able to quantify what we are doing and quantify how we are improving doing it. A couple of years ago, many companies started to publish CSR reports. So Metalor was doing the same. And very quickly, what I personally realized is that this seems to be more an advertisement, a pamphlet, rather than something really with robust data. So yes, there are information in it, but every single number calculated in a CSR report is calculated differently for each company publishing it. So fortunately, you can at least audit those CSR reports, what we have started to do, but we realize that even for audited report, the framework you are using is very different from one company to another, and usually you focus on what you want to put up front, and you don't really focus on the problem, hence the pamphlet for advertisement. So I think the CSRD approach is a very interesting one, and it's a very, very important one that would significantly change how we can measure impact. By having clear rules, having a framework where not only it will be mandatory, but where all the indicators would be calculated the same way, I think we are moving in the right direction. We are offering to the market, whether it's anyone downstream in the supply chain, up to the end consumer, but also through the civil society, through NGOs, we offer tools that can let people compare between different companies. And I mean, Italpreziosi, you have been really upfront on many, many areas, many fields. But what is interesting is to be able to compare what you are doing with what the others are doing. And I think CSRD is really something very important. And yeah, we all noticed, we all learned that the process is slowed down. I think we all know the geopolitical environment right now, but this is a little bit a pity that for once we have an interesting initiative which will really bring data to our industry to have this being slowed down.
May I just step in on that? Yes, the legislation is slowing a bit down. I think for the suppliers, it's probably potentially a good thing because they have a little bit more oxygen because they're often, you know, the tier 2 or tier 3 on the decarbonization. But I think one element we should not forget, the legislation on product claims is happening. And to be able to do a product claim or to market your product as a piece of jewelry, you need the data, and the data needs to be substantiated. So even if the legislation is not yet applicable to an extent, it is applicable because otherwise you will not be able to make claims. And I think this is super important for the industry to realize that because we've seen already a few lawsuits of companies making certain claims. And I think that's also important that the industry gets ready for that.
And just to follow up on this one, I think product claims is something really central, especially for the jewelry market. I mean, John mentioned the definition of recycled gold. I think it's a good example. It's a project that really I suffered a lot with, together with John. But the reality is, if everyone in the industry is using a different definition and they tune the definition for their own personal good, it's not going to work.
And that's exactly what I spoke at the beginning. There's a lot out there in terms of standards, regulation. Harmonization is always the answer to make things easier for the consumer to understand what he's buying, but also to companies to rely on the same source and make sure that they don't have to reinvent the wheel every time that they do a reporting. So again, totally agree with that. And I would like to go on John now, because of course you are an expert both from the downstream to also the upstream. And we mentioned suppliers. There are initiatives that are creating lots of tools, like the Watch and Jewelry initiative. There's Cibjo, there's RJC. There are tools out there, and companies do not have excuse anymore. But how do you think the supply chain is impacted, and how the regulation can have an impact maybe on upstream, on topics like nature, social, climate?
Thanks, and there's a lot there again. I'll try and keep it simple. I think, first of all, if you don't mind, I just want to go back to the title, because we're talking about basically what we now call sustainability and ESG issues. And the title was responsible sourcing, and they're often used interchangeably. People think responsible business is sustainability, and it should be. But responsible sourcing, as it was formed in terms of frameworks, is really about getting your house in order in terms of your supply, your sourcing, transparency. It is relatively inward looking, or rather it is relatively bounded by exactly who you do business with, but it is to do with your core business. It's basically making sure your house is in order and you've de-risked a lot of your suppliers. Sustainability, and this is, I think, where we can, again, pay tribute to Iris and the Watch and Jewelry Initiative. Sustainability is about looking outward. It's about looking at those impacts that you mentioned, the impacts that are beyond the factory gate, beyond your employers and your products. So I think there's an issue there, and you'll hear me say it again here, probably tomorrow. I think the industry and societal expectations are moving from responsible sourcing, keeping your house in order, to looking at impacts. Now, you mentioned those multiple impacts. Now, for a long time, for the last 5, 6, 7 years, the sustainability agenda was driven by a focus on climate change. It was for good reason, a major existential threat to the world, to businesses, populations, and well-being. So for quite good reason. However, we now realize when we're looking at impacts that they should not be viewed in isolation, because by definition, the solutions to climate change and the negative impacts of climate change affect ecosystems, they affect agriculture, they affect food systems, they affect migration. People don't realize that climate-based migration is now on the same level as conflict migration. And migration has been one of the great drivers of the geopolitical shifts in the world. So you start to see the social, the geopolitical affected by these impacts. The question is, what can we do about it? And this, I think, is particularly for the jewelry industry, which is kind of at the end of the supply chain. The question is, it can seem a long way away from the problems, the challenges. You've said yourself, there are some tools around to get you started. So there's tools to get you started in terms of responsible sourcing, but there's also the tools now to say, these are the things we think you need to be aware of, or these are the tools, and Cibjo will be producing a guidance on what's called materiality assessment soon, to say, how do you assess what's material to your business? These things are all interlinked, because once you know what's material to your business, you can then try and establish what changes you can make. To go to John's point, you have to start collecting data. You have to start collecting data that is credible and increasingly consistent. And again, the tools are improving a lot over the last few years. And once you do that, you can start to measure your change. Now, if you start to have change based on data, you can then possibly start to make credible claims. So the claims have to be credible, but I agree entirely. We need, first of all, the industry to understand that there is a set of tools that will allow them to converge on a shared understanding of both the challenges, but also the expectations in terms of outputs, data, measurement. And I think, for me, that's kind of where, at that tipping point, I can honestly speak for Cibjo, that creating a set of tools that is widely accessible is something that we've been doing for the last few years. And by the end, I hope, of next year, there's a foundation there. It should be mentioned that a lot of those tools will reference other tools, such as watch and jewelry tools. So they are mutually compatible, mutually supportive.
By the way, the Cibjo here has really a central role to play. I mean, through its membership, touching literally directly and indirectly millions of companies. I think this is probably the best place to start this initiative.
Fully agree, and I think that's why education is so important. And again, I think that's why we're so happy to work together with Cibjo in different spaces. I think one comment I wanted to make for companies is, in the legislation, we used to talk about supply chains. Now it's value chains. And that's super important when you think about due diligence, because it means it's not just your tier 1, tier 2, tier 3 contracting, but it's also your service providers. So it becomes, again, technically more complex. And I think one comment I wanted to make is, we did an exercise with the European Commission understanding double materiality, which we realized that many companies understand quite well their social impact, very traditional over-hour, seasonality, decent labor, usage of chemicals, etc. But when you look at environmental and nature dependencies, so looking at biodiversity, species, water usage, land, soil, etc., it becomes much more complex. And I think in that context, the initiative is working on a landscaping model, and I think it's super important. We're working with really experts, and this is thanks to Kering and to Cartier and Maison Chanel, etc., on landscaping on different materials. And we've started with diamonds, gold, silver, and some colored gemstones. And I've seen the first results. We'll definitely be working with John and Cibjo once we roll it out. But again, this is to give data, information to the industry and not duplicate. I think the worst thing could be is that we all bring new guides and new documents to everyone and confuse. I think we need to take the best of the best and bring it together under the umbrella of Cibjo.
Totally, and to recap, because in few minutes we spoke about everything. It's all about having an holistic view. Everything is linked, and the responsible sourcing is not just about the governance structure. It's about the impact that you can have if well used and going beyond it. There are outside there many ways you can start this journey through some educational reporting material tools out there. They exist, and I understand what we discuss here. Sometimes it's not easy for smaller SMEs, for smaller companies to start with. Don't be afraid of checking your data, start from them, see where are the weaknesses and transform them in opportunities, because it's all about being aligned with not just regulation, but thriving in the long term with your business. So if you will have a question after for the cocktails, there will be, this expert will be happily answering you. I will leave the floor again to Larry so that we can finish this and go to the cocktail.
Before I introduce our last speaker, and I'm told by Gaetano we have time before we have to leave for the reception, so, and it's, I think, a very insightful presentation you're going to see. I just want to make a couple of comments. We talked about education and a few things here. Is that, for those of you not too familiar with IPMI, this is just sort of a small taste of what we can do. On some of these topics, we have events that have a whole half a day on these various topics. So again, like I said in the beginning, it may not be you personally, but there's people in your company that have these responsibilities that can learn an awful lot. And it's not only just about learning from the presentations. The key to the events that we hold is that you're starting to form relationships and networking groups within those particular, let's call them subcategories of the profession. So you're developing a network of people, call it responsible sourcing. So Alicia's on many panels that we have there. There's a collection of people that can call each other up when they have issues and discuss and learn from each other. So that's part of the process. The other thing I wanted to mention, when you asked the women to speak, 2 years ago we formed a committee, I didn't go into detail, called the Women of IPMI. And because also we're trying to promote more women, particularly young women, to get involved in the industry, all right? And what we've done is we've formed a partnership with, there's another group called the Women in PGMs that focuses solely on the PGM part of it in a mentoring program. And last year, together, we mentored about 50 young women from all over the world, all different continents. I was a mentor for one of those sessions, and it was particularly rewarding to be a mentor as well. So again, if you do get involved in IPMI, you know, the young women in your companies can participate in that program. And there's no cost to that, you know, additional cost to that program. So with that, we were talking about responsible sourcing and recycled gold. So one of the things you do, when I used to be in a previous life, I was president of Metalor for the US, you have to be able to back up what you say. And so how you run your operation and the need to segregate the materials and process the materials is key. So I think with that, I would like to introduce Federico Padrono of IKOI to talk about some of the latest developments that he has that may help you in that. Thank you.
So thank you very much and welcome. My presentation is regarding the K-ALS, the vacuum distillation refining for jewelry, Goldsmiths, and fashion industries. I will start with the process, defining what is the process, then the evolution and the advantages to apply this process in jewelry sector, and then the integration with the chemical refining. So about the process, I'm talking about the acid-less separation. That is a pre-refining process to remove the silver from the alloy using a vacuum technology. This system permits to reduce the silver content in the alloy and to obtain a based alloy that is suitable for treatment with the finished refining step, like wall wheel, electrolysis, aquaregia, that needs to have a low percentage of silver content. This is the chamber. It is a vacuum chamber. You have a vacuum chamber with the water-cooled double wall, the melting zone with a temperature that goes up to 1450 centigrades, and continues during the process to control the temperature and control the weight. Under the crucible, there is a weight scale to control how much material is evaporated and attached to the condenser. We have a crucible and induction system. This is used to treat alloy with a percentage of silver that goes from 20 up to 90%, and you load in the crucible. Then you create the vacuum. The crucible is heated, and you start a distillation. And the silver in the vapor phase is condensed as a solid in the condenser, in the cooled condenser. And this is a matter of temperature and vacuum condition. These all metals, all elements has a different combination, and this permits to separate and to detach some material from the other. For example, if you take in consideration zinc, selenium, this element has a lower evaporation temperature respect to silver. So this permits to separate, going up with the temperature, you permit to detach and evaporate first the zinc, selenium, and then the silver that has a lower evaporation temperature with respect to the gold, and you are able to detach this element and to obtain a base alloy rich in gold. This permits to obtain an alloy that is able to be treated with the final refining process for obtaining the pure gold. This process is sustainable, cost-effective, and in line with the latest ESG requirement to reduce the impact on the environmental and improve the working condition. You don't have any flames, you don't have any dangerous part, so the operator is free to work without any problem. The evolution is to apply this technology, this vacuum distillation, to to create a small machine, a compact desktop machine, for the pre-treatment of different type of stock, for jewelry and goldsmith manufacturing, for reducing the silver content, for the spruce scrap for casting production, for powder that are coming for scraping operation, and for fashion industry to separate the base metal like zinc, lead, from precious metal, obtaining more easily treatment enrichment alloy, and for jewelry industry to separate the base metal from the precious metal using during the welding process for obtaining always a year enriched alloy. This system, like the previous one in a big scale, is really flexible and permits and towards a green production. The technology we apply to create a production suitable for the jewelry alloy with a silver content higher than 10%, like 18 carats, 14 carats, 9 carats. And this is the machine, very compact machine, is with a single condenser, pure graphite crucible, water-cooled chamber, is really compact. It has HMM simple, very systems to control and to manage all the process. And this machine is particularly for the jewelry, is 1 kilo batch. So really small and very useful for the jewelry. The power just need 7 kilowatt. Is induction, and the cycle of the operation is from 1 to 2 hours, is according to the quantity of silver that is contained at the beginning in the alloy. More silver you have, longer, close to 2 hours, is the process for the refining. Is a small machine, the dimension you see is 1 meter by half, and with the capacity of 1 kilo. The benefits of this machine are the cost, competitive and cost reduction, simple to use, low operative OPEX, fast silver separation time, easy to recover gold and silver, no metal loss, no effluents and no fumes. If we apply this system to the distillation of the carat gold, we see that we can have a low inventory as gold is available faster, lower running costs, lower gold loss in aquaregia process, less effluents, less cost per ounces, better material control, and easy in-house solution. The jewelry has not to send to some outside refinery, but can start refining, make a pre-refining internally. With this, with the acid-less separation, so the pre-refining system for takeout and reduce the content of silver, we want to integrate with our new product, is chemical refining. That is just an aquaregia, but with gold content more than 90%, and with the silver content less than 10%. So aquaregia, filtering, gold precipitation, filtering again for obtaining the purity gold. If we see the first step is the alloy is inserted in the reactor, added the aquaregia, so the mixture of hydrochloric and nitric acid, start to heat the reactor, and start the dissolution of the gold. The solution is moved from the field to the filter for removing the impurity, and is around 4 liters of acid for each kilo of alloy. And the second step is the gold precipitation with the filtering. So is automatically the solution is transferred for the first filter to the new reactor. The sodium is added, metal sulfate salt is added. the gold precipitates as powder, and through the filtration, the pure gold is separated from the solution. So, and as you saw, it's really compact solution with 2 meter by 1, and there is no contact with acid for the operator, and very easy to use. In conclusion, this complete process, the K-ALS, with this new our system for the aquaregia for the small quantity for kilo, permit to refine internally the material, to have a better control of the material, and to have the gold faster. Thank you.
Thank you, Federico. And is Gaetano around? Well, I think that concludes our event for tonight. I'm not exactly sure what the arrangements are and where we have to go to get this bus, but thank you all for your attention and appreciate it. Thank you.